G'day folks, welcome back to Pete's Investing. It's the weekend of 8th of June 2024. This is the update for platinum, copper, iron ore and crude oil. And you can see they all have dropped since our last video. So that's on the heat map for the top left there. You can see there they've been predominantly bullish on the monthly, turned neutral predominantly on the weekly, but all of them are bearish on the daily chart. And also you can see there the other instruments we cover occasionally in other videos and the heat maps for those. In terms of a trading strategy, we always trade in the direction of the larger time frame. So if you're trading on a daily time frame, we trade in the direction of the weekly trend, or if you're trading on the intraday like the 1 hour, etc., you trade on the direction at least on the daily time frame. Step 2, you look at the direction of the CCI 150 and look for a fresh breakout from the moving averages. That's where you enter the trade, and you close a trade when the CCI 150 enters those moving averages. And those videos covering those moving averages or those indicators are in the description below should you wish to look at that video. First, looking at platinum, you can see here on the monthly it's bullish with the CCI above the moving averages. On the weekly it was bullish, but it broke down into that moving average range, giving us a neutral signal. And on the daily it's been bearish for a number of days now. You can see that with that massive bearish candle last day of trade last week. Now it's actually dropped significantly off that support resistance area at 1022. The support was previously there and it's broken through that area. But if we draw a Fibonacci between that range, you can see there it's actually gone lower than the 61%, which is a cautionary break below that level because it may fall a lot further. No guarantee, of course, there's never guarantees in trading, but in all probability it might actually fall further than that. Now if we go to the hourly chart, you can see there since our last update, and we use the daily chart here as a reference point. So we only take, in this case, short trades because the daily is broken below the moving average range. And you can see there when it broke below that area there, you would have taken short trades. You would not have taken a short trade during that upswing. Don't take any long trades until you see it break below. So that could have been a false break there. You might have gotten out with a small loss there. Go short there, and you would have probably closed it out there with a small gain. Go short again, small gain. Avoid taking that long trade. Go short again because the price moving averages are dropping, and so is the CCI 150 moving averages. Go short there. That possibly would have been a close, or if you kept it. It depends on which one you're following, whether you're following the price moving averages or the CCI. You would have closed it out at that point. Re-enter it again and close it out again during that point. Avoid taking the long trade and go short again, and you'd be in a trade today, and possibly you would have taken a close position on the very last hour of that trading hour there. US crude's been going pretty much sideways. You can see there on the monthly, although it's broken to the downside of the CCI moving averages. So it's currently a bearish outlook trend. On the weekly, it's been bearish for a number of weeks now. You can see they broke below, so that would have been a place to go short on the daily chart, at least if you were trading on the daily. And on the daily chart, you can see that it was short during those days, and the last couple of days of trade is actually retraced back to the upside with those bullish candles and approaching the moving average range. So just be careful about going short, and definitely don't go long until we see it break above. Now if we go to the 1 hour chart, again going short during this period predominantly. That period started on the, the 18th of April. So if we go back to the 18th of April, back here, you would have taken short trades on the hourly or smaller time frames during that period. Avoid going short or long during this period when it was retracing to the upside. And you would have taken further short trades during this downtrend here, and you would have closed it out with some good profits, and avoid taking any long trades here until we see the daily at least break above the moving average range on both the CCI and the price chart. So high grade copper on the monthly, it's bullish, although it has pulled back this month with a bearish candle so far. On the weekly, it was bullish for a number of months actually. It's broken into that moving average range, giving us a neutral signal at the moment. And on the daily, it's been bearish since about the 22nd of May. And it's actually dropping a lot harder in the last day of trade. You can see that big bearish candle. If we go to the hourly chart, and again going short only during this period from that point on, from the 30th of May, and that coincided with this little period back here. So you would have probably taken, or probably avoided going long or short, because the CCI is pretty much trending sideways there. Even though the price chart's dropping, the CCI is making a few up moves, and you would have stopped. You would not have taken a long trade, and you would not have taken any short trades until this point here, when both the CCI and the price chart are fallen below the moving averages. Taken a few points there, got out of the trade there with a few point gain. Avoid going long or short. That was a bit of an upswing. Remember, we're not going long at all because the daily is in a downtrend. And you would have taken another short trade there when it broke below the moving average range. That would have been a beautiful little trade to take, and you'd still be in a trade today. And you wait for it to break above into the moving average range on the 1 hour chart. Lastly, we're looking at iron ore. There's no indicator for the CCI on the monthly chart, but you can see that we'd probably assume that's at least a neutral. So we focus on the weekly and the daily. The weekly is actually broken inside the moving average range. It's neutral. And on the daily, it was bearish for a number of days there. And we had a big bullish candle the last day of trade. And if we jump to the hourly chart, again, going short only currently because of that break below the moving averages of both the price and the CCI, taking short trades only. And that was from about the 29th of May. So it's back here. So it would have been a nice little entry to take on that candle there, and you'd still be in the trade. It depends on where you want to get out of the price chart or the moving averages of the CCI. Either way, you would have still got it back in the trade, closed it out, got back in the trade, and then close it out at the moment and avoid taking long trades or short trades until we see it break further to the downside to take further short trades. Hopefully you got something out of the video. Hit that like and subscribe button. If you want to support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching, and see you in a future video.